Let's quickly touch on that exchange rate. The Naira trading at just above 160, but pretty much in line as to where the central bank governor would like to see it. Are you confident that we'll see a Naira trading between 150 and 160 to the US dollar?
I want to say current levels have been initiated by the oil flows that were in the system today. Over the last few days, we've seen a lot of oil flows come into the market. So the Naira has trended from the 160, 162 levels to the current level of 160.2. I think those flow support will continue to assist the Naira. But if you ask me, I see trending on the interbank front between 160 and 162. The confidence whether the Naira would trade within the band, as said by the central bank governor, would depend on the accretion to the external reserves. There are a lot of reforms going on right now in the at the NMPC level, and if those reform works, I've seen that a lot of people have been pessimistic about those reforms working, but if it does work, then we'll see some accretion to the reserve. And with more accretion to the reserve, then it gives the central bank the muscle to be able to keep the Naira within the 155 to 160 range. Otherwise, we'll see a major depreciation of the currency.
Also, I mean, you're basically alluding to the big oil companies selling dollars at this point, and this is why we're actually seeing a much stronger Naira. But this also has a lot to do with what we see on the monetary policy front, and when we see the direction going forward, it seems that perhaps it's going to be unchanged. It's sitting at around 12% on the interest rate front. Inflation is expected to breach higher, given the fact that the removal of the fuel subsidy is also going to have an impact. How do you read into this as to possible scenarios that could play out?
If we're talking of the interest rate projection, then the last MPC kept the MPR unchanged, and I expect that to continue at least to the end of this quarter and possibly into the second quarter. With the removal of the oil subsidy, I want to believe the rational thing to do is not to burden the population again with an interest rate hike, which is what the central bank, in my opinion, have done this time, and I expect the inflationary impact of that to trend into between and the second half of the, second quarter of the year. We'll see inflation trending up to 14%, as the central bank governor has said. Be that as it may, I think there's still room for positive real interest rate, and I don't see any major hike in MPR. I think the central bank have been proactive in hiking interest rate towards the end of last year, in preparation for the fuel subsidy removal. Now that we've seen some removal or some partial removal of the subsidy, I don't think there should be any rush to hike it in the same manner, in the same proportion as it was done last year. So though the government is still looking at tightening, that I believe is going to be the policy, because they still need to defend the exchange rate cycle. And I don't see them being irrational about that. So if you ask me, between now and the end of the year, I project nothing more than a 75 basis point increase.